Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Tuesday, April the 27th, 2010. Tonight's market analysis has not been approved by China, and nobody here gives a biscuit. Let's look at the chart. Dow Jones Industrial Average had a great selling day of 213 points. If that doesn't make you happy, man, you're on the wrong side of the trade. Don't cry about it. Now you know. Just move forward. You're either with us or we're taking your money. All right? Check this out. Overbought conditions, of course. All right, we've been trending lower on the low points. That tells us this is phony. We just want to continue to look for the move lower, and there we got it. Nice call on my part there. Thank you very much. Yes, yeah, awesome, great. All right, and we finally broke this uptrend. You'll notice we pierced it a couple times. That's an early warning sign, and boom, now we've closed below it really strong. All right, it's over. That's it for me. Okay. That's the selling. I call that the peak. You may try to, we've been down 213 points today. You might see a little bounce tomorrow morning, that kind of thing. News of the Fed, this and that could push it higher, but we'll get to that in a moment. It's not going to be trusted. We're going to stay on the short side here, okay? And look at this slow start. Plenty of room to move lower before we actually consider any technical bounces. Now, something to point out here that you really got to pay attention to. 1, 2, 3, 4, 5, 6 bullish days, and it took the bulls 6 days to do this. It took bears 1 day to erase 50% of it. Okay, 1, 2, 3, 4, 5, 6. Took bulls 6 days to make this move. It took bears 1 day to erase all of it and then some. What does that tell us? Put simply, bears are becoming stronger, bulls are becoming weaker. Plain and simple, okay? All the signs are telling you the same thing. You want to be stacking the odds of the trade in favor of your money. So that means you've got to be on the winning team, okay? Basically, the gist of it now is that the winning team is bears. And you'll notice it didn't start in the U.S. Today's selling had nothing to do with the U.S. It had to do with Europe, okay? That's important. I keep pointing that out. We'll get into that again, but for now, just look at this as being very bearish. I see more downside. That's just the only way to analyze that. We're going to look at the VIX now. Whenever you're analyzing charts, you want to double check your work. And like I've said before, if you're looking at the Dow Jones and NASDAQ, the S&P 500, any major market charts, you double check your analysis by going back to the VIX. If the market charts are looking bullish, then your VIX should be looking bearish and vice versa, okay? In this case, the VIX is looking very good, and that means the overall market's looking very bad, okay? Note the hammer formations, 1, 2, 3, 4, solid hammers on a bottom. We like that. We told you a couple days ago that she was starting to show an uptrend right here, and you should be looking to be buying on any pullback there. So we told you that, I think, on this day. So on this day, you got an opportunity to be buying, and then she took off. But today's candlestick analysis is what I really want to bring your attention to. That is the most bullish candlestick you can look for. There's only 3 candlesticks I actually pay attention to. Everything is basically, to me, every candlestick is a form of one of 3 major ones. This is one of them. One of the ones that I really pay attention to. The other is the hammer. I love a hammer, okay? And last but not least is the inverted hammer. See this big move here? Inverted hammer, big wick coming out of the top. That's bearish. So when you see a big move like this and a wick sticking out of the top because bulls couldn't maintain it, then you just say, okay, that's about the peak, and be looking to see a shift lower, and that's what we got. In this case, we have a big move higher and a strong close higher. You don't get that big wick out of the top. That's very bullish, which means it's very bearish for the markets, okay? And again, let's look at the slow starts here. Plenty of room to the upside. Note the low points trending higher. Another good bullish sign right there. Let me go ahead and draw that out. Make sure everybody gets what I'm saying. Yeah, because I like to play with crayons. Look at that. See that nice move there? Very sweet. All right. This move here. Break right out of that. No problem. And you have a nice little uptrend developed right there. Okay. You might have a little bit of pullback. Like I said, you've had 213 points to the downside. You could see a little hesitation by bulls or whatever news could come out, and they could try to take some of that back. But I wouldn't trust it. It wouldn't be real in my opinion. I'd stay short, plain and simple. Okay, that's really awesome. We've got some news for you today. If you've not been to our website, it is 100% free. You can sign up there, see what's in my portfolio, gain access to our small cap alerts. It's all free. But today, I'm going to announce that we are making an update to our website. It's still free, of course, but we're bringing in some new features for you, some really cool stuff, and it's going to take us a couple days to do that. So I want you to be on the cautious side right now. I don't want you to, I try to make it as painless as possible whenever we make any changes to the website, but on occasion, someone messes up, someone clips something they weren't supposed to clip, or deletes something they weren't supposed to delete, and then we have little issues. So to make sure you don't miss anything, go to YouTube, subscribe there, and you won't miss anything. Go to Facebook, click like there, you won't miss anything. You will get it, plain and simple, all right? Thank you for referring your friends. I really love what I do, but I couldn't do it without you. So thank you again for referring your friends. I appreciate all the success you've brought to us, and please continue to share our videos. We appreciate that. One last item before we wrap this up. I want to bring your attention to Greece. Okay, we talked about Greece would not be the end of it. It would spread. It has spread. Now it's going on to Portugal with the S&P 500 downgrading them. Downgrading their debt, I should say, and that's just going to keep spreading like that, and it's going to get worse. The thing that is important about this and why you can't just discount it is because you go back to 1929 and you look at what it was that happened there. In 1929, you had a major market sell-off. Early the next year, you had a major market bounce. Look at our current situation. 2008, we had a major sell-off. And 2009, early part of 2009, we had a major bounce. Back in 1930, that bounce peaked in April. Guess what month this is? April. We were in 1930 20 to 30% from the previous peak, and we are there now in the same exact spot. Now notice this. In 1930, everybody who knew anything about anything or thought they did in America was saying the same thing. Oh no, it's over, it's behind us, the recession is past, we're turning a corner, companies are coming in better pretty soon, unemployment will rebound. That it hadn't then, but they thought, sure enough, down the road it will. And that's the same thing they're saying about today. Here's the catch. In 1930, what made it peak and go much lower had nothing to do with the US. It was Europe. It was debt in Europe. I think it was Germany that defaulted on their debt. You cannot discount that today. And it's the exact same conditions we're seeing today. It was a credit problem back in 1929. It's a credit problem today. Plain and simple. Be cautious. Okay? I'd like to say God bless. Enjoy the evening. And if you have any comments for our videos, I love reading those, man, because if it isn't, if I don't get your comments, then I'm just like, got nothing to do all day. It really sucks. Hey, let's look at our disclaimer. Yes, there she is. The information provided herein is our opinion only. You can read, okay? We're here to help you, man, but that's all we can do. We can't really tell you what to do because then the SEC is like has to stop looking at porn and actually come over and, yell at us and stuff like that, okay? If you didn't get that porn reference, it's from news that the SEC got caught doing, and never mind. All right, I'll talk to you guys all tomorrow. God bless and enjoy the evening.